Welcome everyone, and thank you for joining me today. My name is Eric Babcock, and I'm a director here at Greystone Financial Group. Today we're going to be discussing what happened in 2020 and what Greystone feels will be happening going forward in 2021. To do that, I'm joined by Todd Moss, Managing Partner of Greystone Financial Group. Welcome, Todd.
Thank you, Eric. It's a pleasure to be here.
Great. As we titled our quarterly newsletter, The Year That Will Live in Infamy, 2020 gave us a global pandemic in an election year. Can you recap 2020 from Greystone's perspective as it relates to our client portfolios?
Certainly. I do believe that this will be a year that will be remembered well into the future. I do believe it's important to note that the markets were quite remarkable in their ability to climb that proverbial wall of worry during a pandemic and what I consider a political environment that was less than harmonious. And yet the markets responded in a real positive way. I think it's important also to understand that we've had events like this in the past where our country has had the ability to adapt and to move forward. It's not the first time, and it probably will not be the last. Greystone's, as you know, our primary goal is to capture as much of an upmarket as we can and try to shy away or evade as much of the down market as possible. The math, Eric, as you know, works in our favor. If we can capture a solid amount of the up and avoid the down, then it's much easier to achieve a superior risk-adjusted return.
Well, generally, how did our clients' portfolios perform during the initial downturn?
Well, they performed as expected. We were able to capture a lot of the up when the markets were moving up, and when they went down in March, actually severely down in March, we actually did fairly well because we did not go down as far as the broader markets. With that, smaller losses come an easier time of making them back and generating a positive rate of return.
It seemed to me that by the end of October, the markets had recovered to where they were at the beginning of the year. Yet we finished the year with some pretty nice gains.
Yeah, we did, and that's a prime example of why you have to stay in and why market timing doesn't work, generally doesn't work, because if you were out of the markets, if you had moved to cash because of your fear for the political discourse or the political climate and the pandemic, it was very difficult for you to make any money if you weren't back in by Halloween. And so you had to have timed getting out of the market correctly and timed getting back in. I want to emphasize that market timing is very difficult, so to know when to get out and when to get back in over long periods of time is very impractical, tough to do. There is a well-known economist that coined the quote that markets have proven that they can be irrational longer than you can be solvent.
Very true. So the pandemic is still ongoing, though we have several vaccines in various stages of distribution to the public. How does Greystone see the economy and or the market reacting as we move towards fully opening the economy?
Oh, it's a great question. The markets, as I mentioned before, have shown great resiliency. They've shown that and proven that they can adapt and persevere through changing, social and economic trends. The severe downturn in March of last year was mostly an emotional, sentiment-driven sell-off. I want to pay some tribute to the companies in America. It was a testament to their ability to adapt in that changing new normal, and they did a good job of repurposing, making sure they found new and creative ways to boost their profits. We expect the economy to continue to expand and recover, and frankly, if you throw $1 trillion here and $1 trillion there, it tends to have an impact, a positive impact on the economy.
But I do hear a little trepidation in your voice there, Todd.
Well, I smile a little bit, but yes, Eric, trillions are real dollars, and the fear we might have is that there'll be unintended consequences. So that'll be our fight, is to determine what those might be.
Well, you mentioned stimulus. What about stimulus coming from Washington in response to the pandemic?
Well, I think any stimulus will be met with, and has been met with excitement. The markets priced some of it in early on, but again, that kept our markets moving forward. It's hard to be sure, though, how long, but I expect it to continue to recover. And as you know, markets tend to lead the economy, so we'll watch for signs that the market is already pricing in the recovery.
Do you see the economy getting back to pre-pandemic levels before the end of the year?
Well, as I just mentioned, it's hard to know how long it'll take, but yes, I mean, I think it's fair to say that that would happen.
Okay. Well, we had an election. Election years are often emotionally charged. This one was no exception, maybe more so. Now we have a new administration, so what risks and opportunities do we see here at Greystone as policies change coming out of Washington?
Well, certainly there's going to be changes that this administration is deemed their priorities. We expect a long positive run in growth stocks to start to abate, rotation more to cyclical and value stocks. And that rotation will present opportunities for us to realign our portfolios. Again, as I mentioned, we were already in the process of going from a more growth-oriented portfolio to a value-oriented. We would expect a significant change in our energy policy. We would expect an emphasis on global warming. We would expect that these new policies to start leading a rotation from the traditional growth companies that have led our markets for the last 4, 5, 6 years to a more value-oriented stock or strategy. And I think I want to pass along a little caution that some of these changes will not occur overnight. They'll be gradual. One of the things that we'll do at Greystone is try to determine who might be the winners and the losers with these new emphasis and these new policies that the administration endeavors to pass.
Any specific policies you're keeping an eye on?
Energy. That might have a real unintended consequence for two reasons. One, it could create a unemployment concern where we have the workers displaced from one industry trying to figure out if they're going to find jobs in the new industry, or they're going to have to find jobs, be retrained for whole new industries. This disruption on the unemployment, cost of energy, it could be more expensive for the American workers to do their jobs. Could cause inflation. The record number of executive orders in the first 30 days, we're still filtering through all those to, again, determine who the winners and the losers are going to be, and what the real ramification and outcome will be of these proposed and sometimes already initiated changes.
Well, given those thoughts, can you detail specific actions Greystone's taken regarding client portfolios?
Sure. The most obvious one is our fundamental analysis. So we've taken a look at all of our stocks in our portfolios, and we've revalued those. So we looked at the company's balance sheets. We determined what we thought would be the fair value of that company based upon our proprietary process. Then we compare it to the price that the market thinks it's worth. And so we create a list of companies that we believe we would like to own at a certain price or sell at a certain price. And so as we go through this rotation, we're trying to harvest prices that are very high for companies and reinvest in more value or companies that have lower valuations. I will say this, Eric, that there are not a lot of companies out there that are way undervalued. So it's a very stock selective environment out there. You have to know what you're doing.
It's hard to find stocks that are below where we see the intrinsic value. Does Greystone believe a bubble is forming in stocks?
Well, regardless if there's a bubble or not, we certainly believe that there's excess liquidity in the markets, and it doesn't seem to be peaking yet. It's still there. One reason, though, we feel that we should rotate from a more growth-oriented position to a value is because of this liquidity. At some point, it will stop, and there'll be a ramification of that. Markets like predictability, Eric, and the new administration and COVID provides us a little less predictability. Even though they've given us ideas of what they're going to do, what we don't know is the unintended consequence. So if everything happens the way it happened historically, we'll be fine. But we're looking to see what those unintended consequences would be. But in doing a lot of changes with an administration, it could be that there's some type of a triggering event that sends the markets into a sell-off. And that's what we want to be on watch for and make sure we know exactly what we want to do if that were to happen.
While we at Greystone certainly have our own opinion about what the markets might do next, I know we acknowledge no one really knows for sure. Can you lay out in general our plan of attack to manage both risk and take advantage of opportunities no matter what the markets do next?
Sure, I can give you some bullet points in this. We remain tactical, so we want to have more money in the markets when they're strong and less when they're weak. We're rotating our portfolios as we speak to a more value orientation versus the growth, which has led the market for the last 5 or 6 years. We're ready to take the foot off the pedal if the markets were to start sliding, and we believe that'll soften the impact on clients' portfolios. And one thing I want to emphasize, Eric, is we're not market timers. So we're not trying to predict and get everybody out the day before it goes down and get them back in the day before it goes up. That is not a very practical strategy, and it's not sustainable over long periods of time.
It's fair to say that the investment committee has a plan of action no matter what the markets do next.
Yeah, that's fair to say, Eric. Yes, we monitor it daily.
Okay. So a little bit different direction here. As a director here at Greystone, I spend my days talking to clients. There have been several questions that have come up lately. The first one goes something like this: wow, the markets are doing great. Now, what are you doing to protect my portfolio if the markets go back down again?
Well, I think it's a rehash of what I just talked about. Our philosophy of being tactical allows us to be ready to take the foot off the pedal and decrease our exposure to some of that risk if the markets were to go down.
Another question that came up not too long ago, a client asked, can my portfolio protect me from inflation?
I think it's important to understand that historically the stock market has been a very good bastion of value to protect against inflation. It's through all its ups and downs, it tends to recover and provide a great hedge or a good hedge against inflation. Having said that, certainly during any full cycle, there's going to be some pain. There's going to be some adjustments. But the one thing that's been consistent over tens of years is that the stock market, as it recovers, adjusts for the inflation.
A couple of hot topics that have been in the financial press lately, namely Bitcoin and GameStop. Do you have any takeaways for clients on those topics?
Well, I wish I did, but I don't. We didn't buy them. We shied away from them, though, Eric, because of the unknowns and the difficult challenge to price in the unknowns and the amount of risk that these stocks carry. It's just too hard for us to determine the right information to protect the portfolios against a bad result.
Todd, I just want to thank you for taking some time today to share Greystone's thoughts with our clients and make this webinar available. And I know you'd recommend to clients that if they have further questions, they should reach out to their director.
Absolutely.
And,
Yeah.
so again, thank you for joining us.
Well, thank you. I appreciate it. I appreciate being here. And yes, I want to emphasize any questions that we've created, just reach out to us and the directors, and we'll answer them as soon as possible on the spot.
Great.
Thank you.